Hello traders, welcome to ChrisFX. Tell me how many times you have been in this situation that I'm gonna draw on the chart right now. You are on a certain time frame, let's say that you are on the 1 minute time frame, and then you have something like that. You go ahead, you identify your fair value gap, which is, let's say, exactly right here. You place your buy limit order with a stop loss right below the fair value gap, and then what happens? Instead of price coming here and retracing, price comes all the way down and penetrates both this point and this point right here. Well, with today's video, this is not gonna be the case anymore because I'm going to teach you how to trade the fair value gap correctly and which fair value gaps are the ones which are of high significance and how to choose them. So now let's get into the charts and talk about the rules that you need to follow in order to start winning with a fair value gap. First and most important rule is that you have to look for a fair value gap inside a higher time frames point of interest. This can indeed be a higher time frames fair value gap as well, or a higher time frames order block. If this rule is not there, you are not looking for a fair value gap. So number one, look for your fair value gap inside a higher time frames point of interest. And this is a very beautiful example that I'm gonna show you once again. A higher time frames point of interest, as we said, is either a fair value gap such as this one or an order block, which can be this whole area right here. Now you have to proceed to step number two. When price is approaching your higher time frame point of interest, what you need to do is to highlight your areas of liquidity. Here we do have those two potential points of interest, and we have our areas of liquidity. Such area is this area right here. Is this area broken? Is the liquidity below this area grabbed? No, it is not grabbed yet. It has not been grabbed. So go ahead, scale down now on a lower time frame as price is approaching back into your area, into your point of interest of the higher time frame, and wait for this liquidity to be grabbed. Let's check it out together. Let's go and check it out. There you go. Did liquidity below this point right here get grabbed? Yes. So let's write it down. Number two, wait for a grab of liquidity. Very important as well. This needs to happen. Actually, I will write down scale down to a lower time frame and wait for a grab of liquidity to take place. Okay, in this occasion, here we started by identifying our POI, our point of interest, on the 4-hour time frame, and then we identified more clearly the grab of liquidity on the 15-minute time frame. Number three, rule number three, the grab of liquidity has to tap into the higher time frames POI as well. What does this mean? And then we will go ahead and we will sum up everything in the end. This means that here that we identified these equal lows right here, we scaled down of course to the 15-minute time frame. This means that this grab of liquidity that you see with this wick right here happened by this wick tapping into a point of interest of the 4-hour time frame, in this occasion on this purple zone, which is the 4-hour fair value gap. Okay, we move forward to the next rule, which says the following. For that, I will go a scale further. The following rule says, after grab of liquidity, we have to see an aggressive change of character and an aggressive break inside the range as well. This means that we grabbed the liquidity below these two lows, and then instantly with power, with momentum, we came and we changed character and we closed back into this whole range right here above the lows, very impulsively with the change of character. Let's write this down as well. Number four, price needs to come back with momentum and give us an aggressive change of character. Okay, what do we do right now? Now here comes the point where we are going from one time frame to the other. So what you will do right now, this qualifies on the 15-minute time frame as a valid fair value gap as well. So this now can be tradable when price makes it back here on a lower time frame such as the 1-minute time frame. We will move forward, and once price makes it back there, I will scale down to the 1-minute time frame. Okay, let's move a little bit forward. I think this is a very aggressive movement that is gonna happen right here, but I will show you the next example as well. There you go, beautiful. So I will go a little bit back. I will scale down to the 1-minute time frame right now, and we will see how price reacted from this area right here. And there you go, we do change character, and this is a trade that I took and I called as well, and I showed in one of my previous videos. Now you might say, Chris, price went a little bit lower than this 15-minute fair value gap. Yes, it did, but what did it do? It went ahead and tapped into this whole order block area that we left behind. It does not matter, because you will not enter a trade unless you see a change of character on a lower time frame inside the 15-minute fair value gap or point of interest. Here is the change of character. I had entered with a market execution instantly right here. Go ahead, target this area for example, and there you go, you hit easily this 2.7 to 1 reward to risk. Now we will check out, of course price went even higher, we will check out again instantly after this one, the same exact thing happening. What is the thing happening right now? We know that now there is more liquidity below this area right here and more liquidity below this area right here. We still have not tapped into the 50% of this fair value gap right here, and if those things sound complicated, it is fine. It is because actually they are not as easy as people want to convince you that they are. In real market conditions, things are way different compared to when you are just watching a YouTube video of somebody telling you that trading is easy. So if you want to save yourselves precious time, and not only that, learn how to trade effectively, not only with the best trading strategies out there, but also with proper risk management and psychology, go ahead and join the ChrisFX Academy, or of course you can also check out my trading signals, for which I always leave the link down in the description. So let's move forward, you will see the exact thing playing out right now. I will go ahead first and check out if we missed anything right here. 5, we enter on a lower time frame when price makes it back to the 15-minute FVG, let's say, fair value gap or point of interest. And again, traders, it does not mean that if price breaks a little bit below your fair value gap, that your fair value gap is not working. Probably it is tapping a little bit on your order block. Okay, we continue with our rules and we are waiting for this concept to play out once again within the same point of interest, as we said, because still we have not seen price tapping into the 50% of this higher time frame fair value gap. I move forward right now and I will check it out. Let's check it out all together. There you go. We have one of the rules, which is we grabbed liquidity, we tapped into the higher time frames fair value gap as we see it exactly right here. But what we don't have is a valid change of character. So we don't have one of our rules yet. So let's check it out. Still we grab more liquidity. And I think this is a very valid change of character. More liquidity was grabbed. Okay, we penetrated the fair value gap of the higher time frame, yes, but what happened? We did come back aggressively with momentum, as I said, and we satisfied the second rule or the third rule. Let's check out which rule it is. It is the fourth rule. Actually, price needs to come back with momentum and give us an aggressive change of character. And then we will enter on a lower time frame when price makes it back to the 15-minute fair value gap. Now, so what happened in this occasion? We tap into the 4-hour time frames fair value gap. We change character aggressively. We grab the liquidity below all of these areas right here. we come back aggressively and change character on the 15-minute time frame now. So what do we go ahead and identify? We go ahead and identify this fair value gap now on the 15-minute time frame. And as I said, it does not matter if price comes a little bit lower because it taps into this order block. For the moment, I will leave this fair value gap. How do we know whether price is gonna come lower? We don't care, because when price makes it back, we will go ahead with the same logic and wait for a change of character on a lower time frame now, such as the 1 minute time frame. Actually, not such as, on the 1 minute time frame. Let's go ahead and wait for price to retrace back into this area. When price makes it close, I will scale down to the 1 minute time frame and wait for the same exact thing now within this area. Let's go. Nothing crazy, we grab liquidity below these areas. This looks very nice as a change of character, admittedly. So here, that could have been your first change of character. Let's check it out. There you go. You could enter, let's say, at the formation of this second candlestick, on the formation of this candlestick, and then you could target various targets. You could go ahead and target targets from higher time frames, such as the 15-minute time frame. Let's go ahead on the 15-minute time frame. By the way, we might grab even more liquidity, but if we see another change of character on the 1 minute, we will re-enter. This one is gonna be the ultimate target, but here on the 1 minute time frame, our first target would have been exactly this area right here. Second target, this is very close. You could go ahead for this area right here. Let's minimize this thing and check out what happens. And then the ultimate target is up there. Here is a 2-to-1 reward to risk. It does not matter. We have already hit the 2-to-1. We closed 70%, so 1.4 to 1 reward to risk. Of course, you could have placed your stop loss to break even or a little bit below in this occasion. And let's check out what happens now. We are stopped out for the rest of the position. Okay, so let's go ahead and recap things. Of course, sometimes these movements are gonna play like crazy, so this one could have gone and hit, let's say, this target from the higher time frame, such as this target right here. So we are stopped out for the rest of the position, but we saw that this was a winning trade as well. Let's recap things. Number 6 now, and we will do a recap on the lower time frame. Let's say on the 1 minute that we are trading. Again, wait for a valid change of character. Very important as well. Let's go ahead and recap things once again. Go ahead, rewatch this video as many times as you want, or you can also go ahead and write down these rules that I have right here. Number 1, look for your fair value gap inside a higher time frame's point of interest. So we have our points of interest of a higher time frame, such as the 4-hour time frame highlighted. Already, we are waiting for a retracement into one of these areas. Number 2, you scale down to a lower time frame and wait for a grab of liquidity to take place. So you are waiting on the 15-minute time frame, let's say now, for liquidity to be grabbed. These are grabs of liquidity below equal lows. Number 3, the grab of liquidity has to tap into the higher time frame's POI as well. So when we grab the liquidity, we need to tap into the higher time frame's point of interest as well. If this does not happen, this means that price is gonna come, retrace and take even more liquidity until we tap into our point of interest. Number 4, price needs to come back with momentum and give us an aggressive change of character. So once we have made it into this higher time frame's fair value gap, here we had a fair value gap from the higher time frame. If you recall, we grabbed the liquidity below this area. We need to come back with momentum. These candlesticks represent momentum on the 15-minute time frame and change character. Okay, this is rule number 4. Then we go ahead and identify now the 15-minute time frame fair value gap after this impulsive change of character has taken place. So we do that, and then when price makes it back into this 15-minute time frame point of interest now, which is the 15-minute time frame fair value gap. Then we enter on a lower time frame, in our occasion on the 1-minute time frame, but we don't need to worry regarding when we are gonna enter because the 6th rule has us covered, which is on the lower time frame, the 1 minute, we are waiting for a valid change of character. So the same thing from one time frame to the other, we are going and following the same procedure. Here we saw a valid change of character taking place. This is why your fair value gap keeps failing, traders, and today I provided you with the best rules that you can implement and test out so that you will drastically increase your probabilities of entering high probability trades from very high probability fair value gaps which are not prone to failing. This is gonna do it for today, traders, and thank you all for watching. Until next time.